All right, we're just seconds away from jobless claims and housing starts. Oh, my God, be still. My beating heart. There's the futures down another 600. Tough session yesterday. Rick Santelli standing by at the CME in Chicago. Rick, the numbers, please.
Yes, let's start out with initial jobless claims, shall we? We're expecting a number around 225,000. It comes in on the light side at 215,000, and that ends up being down 9,000 from 224,000, a slight revision. We continue to be so well behaved in initial claims, really, for years. Just consider we haven't been over 250 since October of last year. Continuing claims, 1,885,000. That is a little higher than expectations. We did see a subtle revision lower in the rearview mirror. But once again, the 1.9 million that we've reached several times have been revised away. The last time we were above 1.9 million, you're going back to November of 21. All right, let's look at housing starts for the month of March, expecting a seasonally adjusted annualized unit pace of 1,420,000. It comes in light. 1,324,000, and that would be the lightest, well, going back to November of last year when it was just a whisker over 1.3 million. That makes it from 1,501,000 last look, down about 11%-ish. On the permit side, a little bit better than expected. So what may lie down the road is a bit better than expected, but I do caution. Permits are a little hard to qualify and quantify, so these actually now become preliminary March numbers at 1,482,000, and that would be the best level. It would equal these in November of last year. We were a smidge higher. And finally, the last numbers set that we have before the holiday closure tomorrow will be Philly Fed on the business outlook side, which is the service side, maybe the most important, and it comes in at a dismal 26.4 with a minus sign, minus 26.4. We're expecting a subtle but light positive number a bit above zero. Minus 26 and change will be the weakest number going all the way back to April of 23. But I caution, many of these regional outlooks, of course, are headline prone, just like University of Michigan, many of these squishy sentiment numbers. So it gets hard to get GPS. When I look at what's going on with the Treasury complex, I guess what jumps out at me is yesterday when stocks were moving down, they really did capture the market in a flight to safety for a bit. And it wasn't a 2-year maturity. It was longer maturities, which means investors, their take on what was going on with equities and Jay Powell was more about the weakening economy. Kelly, back to you.